Well. Welcome back. You guys came back for more. I see. That's real good. Listen, we already told you last week that we would have some sort of V-bottom reversal on the SPY, right? Some of the broader markets. But we also cautioned that, we could see a little bit of participation from the bears to come back and maybe whack this thing down. And that's what you see right in front of you. I tell you what, if you came here to get some clarity, this is what I'm here for, right? So go ahead and smash that like button and subscribe to the channel. That way you don't miss any of these valuable drops. Now, a couple of weeks ago, I gave out some valuable information and I said that I would bring up a video informing you guys about some of the market moves in the broader market. And so that's what this was here in my turn discipline in the income video, and also in my perfect pullback video. I informed you guys on the moves that could happen. Not only did they happen, guys, but they happened right on time. And so if you didn't get a chance to check out these videos still reign true to this day, and you can use them for a lifetime. These patterns are not going to change, which brings me to a very interesting topic. Today we're going to be talking about the SPY, QQQ, and Tesla, just to give you guys a trading plan to go in next week. And again, you can use these same techniques for any week, any month of the year, as long as you guys can recognize patterns. That's right. Recognizing patterns, I think, is a game changer. All right. Gives you guys an advantage in a market where people are chasing the stock market. So enough of the intro. Let's get straight into it. Now, before we talk about the charts, let's go ahead and go to the fear and greed index. Where are we at right now? We're right at fear. Okay. Fear means some sell pressure, right? A little bit of tug of war, a little bit of buying, but more fear. A lot of times when the needle comes all the way over here towards zero, we get to a point where the market's kind of oversold with a contrarian type of view. Those traders who know that, all right, maybe a buying opportunity is sitting there at fear. There's a famous quote by a guy Buffett states that we're to be fearful when others are greedy, and to be greedy when others are fearful. And right now, since we're right here in the middle, to the left a little bit, right in the fear, we want to gauge the chart to give us some context. All right. So we want to understand in a couple of ways a strength where we can look at it. Right. We want to know about an edge. All right. And so we have some economic data that's going to affect the price next week. SPY, QQQ, right? So you want to know when this data comes out, not because it controls the chart, right? But if you're aware of volatility and that the market actually can move based on data being released on this website here, forexfactory.com, then you understand, for example, let's say around 10 o'clock, this data point was very important to the market and traders cared. That's what it really is, guys. A whole market, a pool of people who care, a self-fulfilling prophecy, right? And 10 o'clock, if they care enough to short it or to sell or to take their money out of the market and wait for something to happen, then that's the effect you get around 10 o'clock. And you usually see a candle close and a reaction at these numbers. So that's why it's important. I do believe that we have a bank holiday coming up on a Monday. I don't know if the market is closed or opening for half a day. Do not quote me on that, guys, but we can find that out. But we do have some data coming on the opening Tuesday. We have CPI that can be really important. So if this is the day that we're coming for, and the following day we have the FOMC meetings, this is going to be a really, really important metric and a milestone for the market. So you're going to want to pay attention. All right. If it's too hot, again, like I always say, stay out of the kitchen, so that you can watch and learn as things are happening. Now, with that said, let's go to the charts. Right in front of you, I have my daily price movement range, which I talk about and I talk about in my community. There's a video inside of my YouTube playlist and in the How to Beginners playlist. And I talk about the DPMR system. That's right, the DPMR system. It stands for Daily Price Movement Range. And it's a traffic light system, a 3-step precision system that I like to teach my students who latch on to the mentorship. And it's very helpful. All right. Again, that's a 3-step precision system. A DPMR stands for Daily Price Movement Range. And right here, the market has had wild swings, as you guys can see. This time frame goes back to January 20th. All right, so we got almost a month worth of data we can work with, and there's some data back before that can actually help us now. But right here in front of us, what do we have? Okay, we have our daily price movement range, the traffic stoplight, right? Green, yellow, and red. Green is go, yellow is cautious, red is stop, right? That's the premise behind the stoplight. A place of demand is at green. Green means go, so price is bought up there. Demand. Green light, yellow light, red candle cautious. All right, speed back up and get back on the highway, and we stop right here at a red light. All right, that's the premise. So remember that, okay? Now, just a couple of days ago, like I said, I gave you guys some videos explaining price action. What you can see was this fallback, a V bottom, which we got that V bottom. All right, there's the V bottom I talked about. This is like an $8-10 move from here. That's demand level to here. And I also informed you guys that if we was to see some momentum, to not get too married to the upside potential, because we had so much bearish momentum to the downside that the bears might want to come back in, right, and whack this thing back down. And that's exactly what you guys see. All right, and so if you took that advice and made some money, good for you. Smash that like button, because we're in the money and we have more money to make. So stick around for the video. Now, if the price is going here and we reject it, all right, the pattern that I wanted you guys to see, right, I said that I had some edges and a hint at the market and what I see. This is what I see, all right. You want to watch for what they call a two-legged pullback. Now, a two-legged pullback is very specific. It means something. It means that there were some traders who chased the upside move, right? They're not watching these videos like you guys are watching these videos. They're not informed of these hidden patterns of psychology, human behavior, which is what I'm teaching you. And so they weren't watching this. And so you have trapped traders here. Granted, some traders made money and we took our profits. Yes, we did. But somebody chased here. And I mentioned that if we could not fail to reclaim these highs, right, that this is failed rotation here. Okay, and then we could possibly make a two-legged pullback, and this is what it seems to be doing. Now, we cannot assume, all right? Now, instead of us picking bottoms and saying we know all the answers and we have a crystal ball, no, we want to think about technical patterns, all right? And so here's a couple of scenarios, and we're going to move on to the cues. Hope you guys are liking it so far. Now, think about something. Next week, Monday, Tuesday, right? The market could be closed on Monday. We're going to find out as you're watching this together next week. And so the market opens. And let's say some folks chased, calls, or puts. The only way we're going to know is if price is below or above a certain level. Now, what are the levels I'm speaking of? Now, we are on the 1 hour time frame. And remember that the green, yellow, and red line comes from my daily price movement range, the DPMR system. And you can check out that video in the playlist. Subscribe to the channel, and it'll be ready, available for you whenever you need. Now, back to the lesson at hand. If we wake up Tuesday, 9:30 Eastern AM time, right? The market opens up, and we are below the 21 EMA. Convincingly with volume, still creating what they call here is the lower high, right? Creating our lower high at the failed rotation mark, all right? Then we could possibly make that two-leg pullback. But we want to wait here at demand, right? Where's demand? Demand is around 677. Now, there could be a trap. Pay attention here. You want to wait for context. Even though we know these patterns and they happened before, we still want to wait for context. Because, you don't know, guys, we could wake up and price is below this area here of 677, okay? That could possibly happen. That could happen. So if that's true, that we could wake up and price is below, then it means that we can't chase. Maybe the two-legged pullback that I'm going to reveal to you is going to play out, and you know how to react because the move already happened. But if we wake up and it's hovering around here, this is what could possibly happen. Now, you see the move down, okay? Okay. All right, and we have our bounce. Okay, and then we have our rejection, and we're right here. Now, this is what you see here, okay? Now, if price falls and goes back here, this will be that place of demand that it bounced before, right there. You might want to watch out for something they call a try failure. Let the bears try once and let them try twice, creating a W shape. See here? Let the bears try once at a demand level. They tried to break price down, but they failed. We pushed them up a little bit, and then the bulls chased, thinking that we was in a more of a bull market, and then they got trapped. See, it's bears and bulls both getting trapped. Two traders on two different sides getting trapped, and the pattern reveals that. All right, now let's say price drops here in the morning, right? When the market opens up next week and price stops here, this pattern can possibly play out because people are chasing in a double bottom, right? But we have to have that context. Just to go back up here to retest these same highs that are rejected from. And if we get here and we explode, that means that we have trapped bears who tried to short the market down. didn't recognize this pattern, and their stops are right above here, this line. Run those stops as fuel right here. Run those stops as fuel to fill these gaps, to reclaim some of these highs around this area. All right, this is your money area if you trap in some of the bears chasing. Now that's your one scenario. Here's a second scenario. All right, now we're going to get to the two-legged pullback, okay? Because if we do hover around here and chop around here, or if we fall back down next week, all right, and you guys are not in a play, you could possibly get this move, okay? That two-legged pullback like here. When price falls all the way back down here, okay, to retest some of these lows here that you see to the left to fill those gaps, all right, and we fall right back down here. Okay, now you don't want to chase. All right, this move down, all right, that next leg down is mimicking this leg down. Okay, a pattern that I like to teach my students, all right, is a two-try failure. That's right, you don't want to pick bottoms, you want to wait for a technical trap. So that pattern that I told you about right here that could possibly happen with the W shape, it could happen down here, either that or a V bottom reversal. All right, so either a two-try failure, let them try once, let them try twice. Right now I know where their stops are, guys. Their stops are right above here. Run those stops. Okay, we got to trap in that liquidity. That's what it's about. Those stops are right above the W shape, right above the neckline, and we want to run those stops. Now that is the second scenario of a W shape after the two-legged pullback. If we don't get this double bottom shape, right, technical pattern dropping, and then we trap in the bears, then the other variation you want to see is a V bottom reversal. Now we talked about this, right? Look, guys, it's right here. Look, a V bottom reversal. We could literally go up to the 21, retrace, all right, reclaim, and go back towards the top and start ranging, guys. This is what you like to see. Listen right here to your left. The same pattern I just drew here is right here. V bottom, we go up here, retrace a little bit, reclaim the highs, and re-range. See, these patterns are right here in front of you, and you guys have to understand that. Now, I'm going to take all of this off of the chart. And we're going to go back because I want you to see that these patterns that I'm telling you about are not made up. They come from a real place, because just here on the 1 hour time frame, the same pattern I told you about how the two-legged pullback and we trapping the bears, I want you to pay attention to before. Let's go back in time. Let's see if we can see that same pattern. Hope you guys are enjoying so far. If so, smash that like button for this value, because this is pure game from a 10-year veteran. All right, so here we go. Here we go. Look at this. Way back in November of last year, you can see that pattern. Now, what do I mean by a two-legged pullback? Okay, and trapping in the bears. Okay, see the same pattern. Watch here. You have a two-legged pullback. All right, that's the two leg, and then we V bottom and range. Okay, now that's a small variation. What if you see in a bigger picture? Right, here's another one. All right, you have this one leg, we have a pullback, and then a second leg. All right, and what do? We trap in the bears. Let them try once, right? Let them try twice, 3 times, okay, ranging, and now we caught them to retest some of these highs. Okay, the same pattern that I gave you before. This is what you want to recognize and pay attention to. All right, guys, you got that? Now let's move on along. Hope you guys have been enjoying so far. See, trading doesn't have to be hard. If you need time to give yourself some grace, do so, guys. I understand that this could be new to anybody watching, anybody that's a beginner. And by the way, which reminds me, if you are a beginner and any terms that I'm using are confusing to you, I started a new series, right? And it is called Beginner Trading Terms Explained. I want you guys to understand the terms and the lingo. That way, when you're trading, it'll make more sense and you can pick up on this game that I'm giving out a little bit more quicker. Again, that playlist is inside the How to Beginner section. So subscribe to the channel. That way you do not miss valuable information that I put out to the community. All right. So here we go with this move on to QQQ. All right. I want you guys to see some of the same similar things that are just going on. All right. Here is the Qs looking similar, so you can kind of see where we're going. All right. So it's going to be the same thing, and I won't bother telling you guys about it. But as you can see, the same pattern, and we're looking for the same scenario. All right. Tesla is driven by the actual Qs, so we're going to see Tesla and see what Tesla looks like. Okay. All right. Okay, now Tesla looks similar to the Qs as well. And so those who are watching, remember we have this big range above us here that could act like a magnet. But right now we have some momentum because the actual banks are letting go. All right, they're buying more puts on SPY specifically, and some of the Qs, you're seeing some of the banks, they're coming from a defensive stance. All right, so doesn't mean major sell-off, but they are coming from a defensive type of stance. And so you're going to see some profit being taken possibly up until the end of the month, all right, for the market rotation. That's what you could possibly see. But Tesla could revisit these lows again the same way the Qs can, and it's very volatile. So just be watching out for that right here. We do have this range here, and we got to break out of this range to get over the point of control in order for us to retest some of these highs. So think about your risk to reward. If you take a trade here, your risk to the upside is about a 10-fold. You want to be securing profits around these areas, 436 and 438, 440. We are at 417. We can see a $20 move in Tesla. We've seen it time and time again. So you want to take a breakout trade above here and or try to buy the demand level. If we can see, all right, price get above the 21, okay, and or hold demand. But I don't know if that's going to happen, guys. Like I said, this is resembling the Qs and SPY. So you want to wait for gaps to be filled before you try to think about the top. But don't ever chase price. It is the worst thing you could ever do is chase price. All right. So I'm going to go ahead and end that video there, guys. Listen, there's going to be a lot of volatility next week. It's going to be a lot of moves. And you just want to understand that you don't want to chase. All right. A lot of people are buying puts and calls at the wrong time. And this is why traders get trapped. All right. If you're trading options, Forex, it doesn't matter, commodities, gold, silver, it's the same thing. If they have options, if there's a derivative behind it, then you're trading against other people, algorithms and computers. And sometimes you don't understand that. To get a deeper understanding of that, again, there's a playlist for you called the Discipline Files. And I want you guys to learn that, all right? The Discipline Files. Inside of my playlist, check it out. Step your game up, man. It'll save you some time. That's why I'm here. And that's why I created this channel. Soon you'll really understand. Just like right in front of me, this PCE is a put call ratio, and it is a market eternal, and I can gauge this to say how many people are buying calls and puts and why, right? Is it at an extreme? What happens is if it's at an extreme and it falls all the way down really fast in one day, does it make the market rally or sell off? These are things you want to know and things that I teach. All right. So stick around for more of these videos like this. There will be more. I hope you guys have enjoyed. All right. The banks are offloading. They're playing a defensive mode. So could we see some volatility around the CPI and the FOMC meetings? Could we? We don't know yet, but you guys can stick around and you will see. So I appreciate you guys' time. Thank you for watching. All right. And I'll see you guys in the next one. Hope this makes your money for you. You guys stay safe out there. Protect yourself. Always define your entry, your exit, and your risk before every trade, and you'll be just fine. I'm Coach UV, and this is the Unique Trading Group. Until the next time, guys, peace.